It's been a tricky week for gold. It hit a 2-week low following the Senate passage of a budget framework. It's resting now at $1,280.50, the lowest since October 6th. Where do we go from here? Good question. The man to tell us, Peter Schiff, CEO of Euro Pacific Capital, joins us now. Looking a bit wobbly, not looking too good going into the weekend. It was suggested that Donald Trump may be favoring economist John Taylor for the Federal Reserve chair. I bring that up because some people say that might have indicate some bad things for the price of gold moving forward.
Well, first of all, I doubt that, but Taylor's a long shot. I think there was some rumors because Trump had a favorable meeting supposedly with Taylor, but I don't think Donald Trump would take a chance on someone like Taylor. I think he wants somebody who's going to be more of a team player, who's going to be more actively involved in helping to prop up the stock market, especially now that Donald Trump has basically attached his presidency to the fate of the stock market. So he's not going to take a chance on a wild card where rates might go up. He wants someone that's going to keep rates down, that's willing to do another round of quantitative easing if that's what it takes. And so I don't think John Taylor's his guy.
Let's talk about economist Harry Dent saying that we could see fall in prices as low as 700. Big companies like Goldman Sachs, they'll still prefer it. Should we maintain a positive or a negative outlook on gold prices in the near future based on what we've seen from October 6th to now?
Yeah, well, Harry's been a bear on gold for a long time, and actually 700 is a higher target. I mean, for a while he had a target of 200 or 300, so he's had to adjust that upwards. But I think Harry's wrong. I think there's a lot of things that Harry says that I agree with, but his price target on gold is not one of them. I think he has too much confidence in the U.S. dollar and doesn't understand the nature of fiat money and the fact that if all the things that Harry believes are going to happen, that is very bearish for the dollar because the Federal Reserve is going to print a lot of money. He's looking for massive deflation, but I don't think the Fed is going to allow that to happen. They have the ability to stop that by printing money, and that's exactly what they're going to do. Earlier, before I got on, you were talking about these tax cuts, and one of the reasons that gold has gone down a little bit recently is the markets are anticipating the tax cuts,
right,
and that's also been a positive for the dollar. But what traders don't seem to understand is these tax cuts are very bearish for the dollar and they are bullish for gold because all that's happening is the government will be replacing tax revenue with debt, right? See, we're not cutting the size of government. Government's going to keep getting bigger and bigger and bigger, but what we're going to do is pay for that bigger government by issuing more debt, and that means more money printing, it means more inflation, and ultimately that's a lot more expensive. It's more expensive to pay for government by borrowing than by taxing. And so this is going to be a big negative for the dollar because we're debasing the dollar in order to cut taxes. So ultimately, this is going to be a buy the rumor, sell the fact. If we get these tax cuts, the dollar is going down, not up, and gold is going to go way up, not down.
Let's say we face these Fed rate hikes in December, like a lot of people are talking about. Do you see the dollar gaining strength on that?
Not really. I mean, the Fed has been raising rates since December of 2015, and the dollar is lower today than it was then. Gold is higher now than it was then. So it was the anticipation of rate hikes that helped the dollar. By the time they actually started hiking rates, the dollar was going the other way. And I think the same thing is going to happen this time. I think the dollar has caught a bid on the anticipation of another hike, but I think if we get one, they're going to sell the fact. And the dollar downtrend, I think, is firmly in place. I think you had tremendous dollar bullishness when the year began. The trade was very crowded and very wrong. And I think this is the beginning, or this is the first year of what is going to be a major, major dollar bear market that is going to take the dollar to new all-time record lows and in the process send gold to new all-time record highs.
Peter Schiff, CEO of Euro Pacific Capital, thank you.
Thank you.